it's Lisa. It is Financial Freedom Fridays, and today's video is going to be a little longer. I usually go about 2 to 3 minutes. This one is going to be a little bit more. I'm in my studio as opposed to just walking around because I have a lot that I want to share. So on Wednesday, on Wednesday, I recorded a video that talked about emergency funds and where you should keep your emergency fund, okay? Crazy as it sounds, on Wednesday night, we had a massive hailstorm, okay? Massive. I actually took pictures for you, so let me share my screen and show you. There you go. Massive hailstorm. So the picture that you see of the actual piece of hail is one of our neighbors. Her son went out and grabbed one of the bigger ones. She lives 2 streets over. And then you see a picture out our front door and then a zoomed in picture of our front door with all of the crazy hail. It was crazy. We were actually talking to our son on the phone, and he said, you know, it sounds like you guys are inside of a dryer. You know, you put the clothes in the dryer, you hear the da-dun, da-dun, da-dun. That's what it sounded like. So massive amounts of hail. The storm lasted for about 30, 40 minutes. It was crazy. It really was. I'm going to stop sharing. Okay, so yesterday, on Thursday, we got an estimate to find out if we had hail damage. And yeah, we need a new roof, because who knew that you can't just replace the few shingles that are damaged and dented. You can't. You have to replace the whole thing. The piping, I don't know what that's called, where the grooves of the roof meet the seams, that's metal flashing of some sort. All of that is damaged and bent. All those little rooftop looking house type things that are all metal that allow ventilation, all those have to be replaced. Most of our downspouts have to be replaced. Some of our gutters themselves have to be replaced. They're all dented. We actually have a gutter guard system installed. Several of those were damaged. Our grill got damaged. We had screens that have rips in them because the hail came in sort of horizontally at a diagonal. It was crazy. It was crazy. And so massive homeowners claim is in the process. So what does this have to do with the emergency fund? Well, this is sort of an emergency. But if you remember, I've said many times that most emergencies aren't really emergencies. They're just things that we haven't planned for, okay? So for us, we chose, when we set up our homeowners insurance, we chose a $2,000 deductible for wind and hail, okay? $1,000 deductible for everything else. We carry a $1,000 deductible on our cars. And why do we carry a $1,000 deductible for most everything else? Because 90% of all emergencies fall within $1,000. And when you have at least $1,000 in your emergency fund, you therefore have the money to cover that deductible, and you get an incredible price break. I mean, we're talking 30-40% price break on your monthly or annual or biannual premiums when you have more than a $500 deductible, okay? So when you have monthly premiums that are super high, it is almost always related to a lower deductible, okay? Increase your deductible, lower your monthly premium. Decrease your deductible, raise your monthly premium or annual premium. These days, there's not so much difference in the amount that you pay from a monthly premium to a biannual premium to an annual premium, semi-annual. I always get that wrong. So there's not really that much difference. So whatever fits your budget better, I really don't care about that part from a budgeting standpoint. So most of our premiums are actually monthly. It's not that big of a deal, okay? Okay, So where's this $2,000 going to come from now that we know that we're going to need to get a new roof, new downspouts, new grill, which I'm excited about. I'm just saying, um, new window screens, and we haven't seen any cracks or anything in the windows. When they come to do the inspection, they will determine whether or not the frames were bent or any of that. So it's going to be pretty extensive. Okay. So where does this $2,000 come from? Now we have much more than $1,000 in our emergency fund. Okay. So we could just pull the $2,000 from our emergency fund. However, regardless of the amount that you have in your emergency fund, you must put it back. You must put it back, okay? Because if you don't put it back, it's not going to be there when you need to use it for the next emergency, which is going to happen within the next 10 years. Everybody has an emergency at least once in 10 years, okay? So what we tend to do, we use sinking funds. Click the link in the description below to get more information on sinking funds. We use sinking funds. And so we have been saving money for lots of different things over the last few months, years. Our daughter is graduating from college in a few weeks. We have a pretty large cash gift that we've been saving to give to her. We are taking a family trip to culminate her graduation. We have another trip coming in the next few months or so. We've got lots of little bitty vacations coming over the next few months. None of that money is going to be touched, okay? Because that is within the next 6 months, we need to use that cash, right? And honestly, all of that cash is in our checking account because we know it's coming. We've got deposits, things like that, excursions that we're paying for, all that stuff is paid for in using sinking funds. We're not touching any of that, okay? We continue to add money to our emergency fund every month. So that money, instead of sending that to our money market account for March, we will not. We'll leave that in the checking account, okay? We are currently saving to pay cash for the next vehicle, whenever that is. We will send that to the money market account because regardless of the emergency, car purchase is still coming. So we do want to pay, send that money to our money market account so that we'll have that available, okay? But there are other sinking funds that are long-term, like holiday giving, right? So our daughter's graduation is coming up in May. Nobody else is getting a gift in the next 6 months anyway, because there are no birthdays coming. Christmas is still 6 months out. So we might pull that to go towards that $2,000. Not sure yet whether we will or not. Okay. There are some other short-term things that we just want to do. Maybe we won't go out to eat quite so much in the next 6 weeks or so, and pull some of that money to go into the $2,000 deductible. The point that I want to mention to you here is that we have lots of places that we could pull the $2,000 from so that we don't have to go to the emergency fund. But whatever we pull from the emergency fund, we will put back over the next few months so that we can get the emergency fund back up to the level where it used to be. If you don't put it back, it's not going to be there the next time you need it, okay? Now, I know you're saying, well, that's great, Lisa. You just got $2,000 laying around. Well, we've worked hard to get ourselves into a position where we're not managed by debt, which gives us more flexibility to do things with our money, okay? In addition to that, we also took the calculated risk of creating a $2,000 deductible for hail and wind. Why? Because we've lived in Kansas City for 13 years. And this is the first time we've been impacted by hail and wind. So that's a 13-year trade-off. I'll take that bet, okay? Once every 13 years, you'll need a $2,000 deductible. Do the math on that, right? So when you add that up versus the difference in having a $1,000 deductible for hail and wind versus a $2,000 deductible, you'll see why we chose to lean on that $2,000 deductible, okay? All right, what do you do if you don't just have money laying around? Well, first of all, if you don't have $2,000 in your emergency fund, you wouldn't set your deductible at $2,000. Okay. You set your deductible to at least be covered by your emergency fund. So if you only have $1,000 in your emergency fund, then you would have $1,000 deductible. All right. If you only have $500 in your emergency fund, then your deductible should be at the $500 mark. You are not using credit cards to pay for the emergency. Okay. I'm going to say that again. You are not using credit cards to pay for the emergency. It is cash. Now, then you may be saying, well, you just told me that I would save more if I had $1,000 deductible. Yes, only if you have the money available. So you play in the sandbox that you're in, right? So if you only have $500, then you would have a $500 deductible. When you get to $1,000 in your emergency fund, then you move your deductibles to $1,000. It's a simple call to your agent, or if you work online, you would just go in and adjust your deductible to $1,000, and voila, the next month your premium payment would go down. Okay, this is incredibly important. So this is where so many people lose money. Okay, and when I work with my clients, I help people to find money that they are unknowingly and unnecessarily losing. And this is one of the major areas that people are losing money. Your deductibles are too low. You are taking on too much of the risk because your deductibles aren't high enough. And because your deductibles aren't high enough, the insurance company is charging you a higher premium. Okay. We do a comprehensive analysis for all of our clients. Okay. I'm going to put the link in the chat. We not just look at your insurance, we do a comprehensive review of all of your debt, all of your assets. We make sure that you're not losing other money, like in, I would say private mortgage insurance. I was working with a client a couple of weeks ago. She had no idea that she could drop her private mortgage insurance. And she was the second person that I had that conversation with in the last 3 months. So we go through and help you figure out where you are unknowingly and unnecessarily losing money. And we chose not to lose money in our wind and hail deductible by increasing it to $2,000. And now that we have to file a claim, we will pay that $2,000, put whatever we use from our emergency fund back in the emergency fund, and get ready for the next emergency. Reach out if you need more. I really wanted to go into that in grave detail because I feel like we just lose too much money, and I don't want you losing any more money because we all work hard for it. So I hope that's helpful. Bye.